The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful Tuesday, August 28th. It is a gorgeous day down here at the headquarters of Technical Trading and Investing, TFNN.com, in Clearwater, Florida. And just a beautiful day out there. Coming across the causeway today, I saw no less than at least 18 cop cars and actual boats going up and down the causeway. But apparently some protesters are threatening to close the bridges and some of the causeways today, so they were littered. I saw no protesters, but a ton of cops and a ton of police boats. Would have probably been a pretty nice day to be out there. I saw the Sarasota Sheriff's Department have his nice, it looked like about a nice 38-footer with two 200-horsepower engines on it. Would have been nice to just be able to idle around on a day like this. Nice winds blowing a little bit. Just a hint of a little white cap out on the bay. But absolutely a very nice day out here. We honor today, this day in 1922, the first radio commercial was broadcast. Kind of seems that it would have been broadcast before then. 1922, Queensboro Realty received 10 minutes of airtime on a New York station, WEAF, still actually broadcasting on 11:30 a.m., and they paid $10 for 10 minutes of time. Of course, we have commercials here, but hopefully they're a lot more pointed to what you might be thinking about these days. And of course, I can't think of about advertising without the Mad Men of AMC's television series. I just never got into it. Everybody always beating everybody up, always drunk, always smoking. Ugh, I don't know. Just reminded me of my childhood, hanging around too many people that were always drunk and smoking. Not my parents, but other people's parents. I know that day existed, but I don't know. It just doesn't interest me. I always was trying to get away from those people smoking. Anyway, Isaac, of course, headed, closing down a lot of the wells in the Gulf. We continue to see gasoline prices rise, with crude prices staying somewhat flat. What do we have? Up 70 cents today. Not all that exciting. Pretty much locked in this $95, $96 price range. Kind of like what we're looking at in gold, which is that trading range from about $16.75 back down to probably $15.50, $15.30. It doesn't look like we've got enough energy to really pop that today. We've got a little bit more weakness in dollar out here. It's off 35 cents at $81.34. But you would think that we'd see a lot more, an easy run to $100 on crude. But I guess the problem is in the refineries being closed and the refinery fire in Venezuela. What else do we have going there? Just hope everybody's safe and sound on the Gulf Coast. Let's see, what else do we have? Apple versus Samsung. We're talking a little bit more about it. They basically, it gets a little hyper technical here, but I've been saying that this is probably not a big deal and it would fade fairly quickly. Apple is off about $1.73. I believe this thing, probably give it a couple more days and everybody will figure out it wasn't worth the paper it was printed on. The jury found no direct infringement, but did find an inducement. If there is no infringement, they can't actually put a dollar amount on non-existent infringement. So still kind of very cagey. Last night, the first thing that the jury foreman went out is started making the rounds of talk shows. He was on Bloomberg and some other show also. Just a little unseemly, especially in view of him having his own patent lawsuits going on at the same time. I suspect this is all going to be thrown out and all restarted all over again. They awarded damages for a product that didn't infringe, and they found that it didn't infringe, but they awarded $220,000 for it anyway. There's a similar inconsistency for the Intercept version of the smartphone. They awarded Apple $2 million for it, but found out it didn't infringe. There's a lot of these things where the work was very poor by the jury, and probably a very good case this thing's going to both be held over for a new trial, and any verdict probably at least set aside for the moment. Why it has nothing to do with investing. Pretty interesting, I thought, for the Darwin Award. Rarely do you catch a guy that running around in a ghillie suit, which is like a suit that they use for snipers, but it looked amazingly enough like a Bigfoot person, and apparently, I guess the nickname of it, the sales thing, is actually Bigfoot. Well, apparently he was a little bit drunk and running around back and forth on some remote highway when he was hit by two cars, not just one, driven by a 15 and a 17-year-old girl. Two different cars, both by young girls. I don't know exactly what time this was. Of course, he was killed instantly. But I don't know. I don't think I'd be running around back and forth in Montana trying to act like Bigfoot, because how many of those guys got rifles and would like to take a shot at you? I don't know. To me, it seems worthy of the Darwin Awards. There's a nice chart out available today. I can't even remember where I found this, but it's the SNAP program, which is basically food stamps, or the food stamp program, giving us a good idea of just how many more people are on food stamps than were. And of course, that big arc started around 2005. That is each one of those little blips is a year. But we can see that we've really gone up in pretty much a parabolic arc. Of course, the debate is always, what is real compassion? Compassion having very low numbers on that, where people don't need it, or compassion where everybody does need it and has to have it. But things are not looking good, and even the last year, although the pop was smaller than the previous 4 years, still nothing to crow about. I didn't check to see if Sanderson Farms actually did come out already, but I am going to check it right now. One of the few that looked like it was going to be something new. Oh yeah, up $3.50. Sanderson Farms, so the earnings must have come out. Let's see if they've got anything on headlines, and we'll check on that real quick. Egg output after, so kind of interesting, up 8.5%, well, over 8.5% as we looked already. So they must have come out this morning. Tomorrow we've got Joy Global, Brown-Forman, TiVo, Pandora Media, Vera Bradley, Castilla Waste, Fresh Market, and H.J. Heinz. I think that Fresh Market might be one that would move on earnings. TiVo, I think everybody else, Joy Global might move the market a little bit. I'm expecting continued weakness in Pandora Media, but maybe we'll get a chance to look at Fresh Market before the end of the day. I suspect that one and maybe Joy will be the only two that really move significantly. Pandora probably down. Earnings Thursday, we've got Sienna and the new, or fairly new IPO Splunk, SPLK. I don't know if that's going to be their first earnings or their second, but they haven't been out that long. So we'll take a look at them. MCP actually had a little pop. Let's check them out here today. They are finally into production, up a good buck, up 11% here today. Of course, the miner of rare earth minerals, they are backed by the U.S. government, kind of pushed out there when China was the only country actually mining in the entire world, mostly because of environmental concern. In the meantime, Molycorp's come back online. There are 2 mines in Australia that are coming on strong. And we found out that North Korea has probably about $3.5 trillion worth of rare earth minerals that they could possibly mine out of the hills that no one lives in. And North Korea, and already starting to make some money on that they're using, of course, to ramp up more military operations. We'll see whether or not the youngest son of the old dictator actually decides to use it for good, or decides to keep it a stinking hellhole that it's been for the last 30, 40 years. What else do we have here for him? Lexmark, this I think came out intraday. Let me see on them. Lexmark came out and said that they are going to get out of the printer business. LXK is the symbol on it. Probably pretty good because it was a big drag on the market, up 17% here today. And probably going to be a good thing for HPQ. Check them out too, see if they got any pin action on it. And down 34 cents. But Lexmark was making a lot of printers. That printer business, people using a lot less ink these days, but are going to cut 1,700 jobs as part of a cost cutting restructuring move, and seeing a little bit of action in it. Action is far and far between. Anyway, that's pretty much the news for today. We're going to get looking at charts fairly quickly. Let's see, maybe we should look at Lexmark, a couple of those before the breakout here. If I can come out to it, LXK, right? Yeah, see if we can see where this thing's LXK. See where it's going, and nice little bump coming back into the $22 range. Of course, they had a huge move down on volume, but it looks like they're having heavier volume up today. A lot of these stocks are just super heavily shorted. Any kind of good news a lot of times is enough to push these. Came down on 8.1 million shares. We've already got 9 million shares on the upside today. Could get back up to that $24 range where the big drop-off and gap down did happen. We'll continue to watch that. But, it kind of made a lazy ABC up, so it probably wouldn't have been too bad to bend in this thing. But don't think you could have predicted exactly when they were going to come out and talk about dropping their printer line division and getting back into the stuff that is fairly profitable for them. Let's see what we've got, some tests here for the 27th or the 28th. It is okay. One of the first ones I wanted to look at before we get to anything else, I wanted to see how Amazon is doing. This is one of the big ones, and it's up testing these highs on what do we got? 2 million shares already today, but at $244 on September 19th. You had 8.2 million shares. We've been going over that by a good $3 so far. Very, very light volume so far. Anyway, we'll be back and look and see where the tea leaves are saying Amazon is going to go. Give me a call in the meantime, 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to get to a couple of stocks. We do have Kay Rico calling in. How are you doing today, Kay?
I'm good. How are you feeling, Dave?
Good. So we're talking about real estate today?
Yeah, well, actually, I'll be straight with you. I talked to you about 10 days ago, 8 days ago, about the same subject, Lennar. Mm-hmm. And I was wondering, here's what I'm doing. I want to be an expert on one stock to trade. And if you would do me a favor, could you put up the 10-minute, 10-day, and that'll bring us right direct to my question. And I'll point it out once you have it, if you could do that for me.
I don't do 10-minute charts, so
okay.
I do end of day or longer. But what are you trying to get to?
Well, if you saw it, what I'm getting at is on the 10-minute, 10-day is an example of when Lennar gets over its Bollinger Bands in the morning, or under the Bollinger Bands in the morning. There's always a reactionary, quick, fast finger trade available. And I've been fortunate to catch it 3 times in the last 30 trading days when I'm paying attention to it. But I noticed when I come back the next day or the next hour or whenever I study it, it just seems to be a very faithful play in the early mornings or even in the middle of the day. If it goes under the Bollinger Band or over the Bollinger Band, there's always a 10 to 15 to 20 cent move in the right favor if you play it right, long or short?
You know, there were a lot of stocks. I used to play lunchtime, the indexes, because back in around 2000, it was almost like clockwork. Every day at 12 noon, people would get off their lunch breaks, and the market would jack up the price of stocks for 1 hour, and then it would go right back to where it was before. You could almost play those like clockwork. I haven't seen that so much anymore. Normally on a single stock, those will work until they don't. Normally there is a organic reason for those happening, i.e. someone getting in or getting out of the marketplace. And those are computerized programs that are running behind there, and they'll run until that program or that buy or sell program is over. So, you know, they'll tend to work, and then they don't. But there's probably an organic reason. That is, the buy or sell program that's watching the market on there pretty much knows what it's doing on buy and sell orders, and it's going to continue to do that until they're over it. I have yet to see those last very long, but a lot of times those, you know, sometimes you'll see those things last up to 4 weeks, but that's probably on the far extreme of anything I've seen in the last 8 years. So in the olden days, there would be people that were doing it by hand. And it took a lot longer for them to get in and out of stocks. And you know, it's. Did you watch the show or anything yesterday?
No, I was working on problems here. We have lots of flooding.
Yeah, that's fine. And we have a little bit of that too. I was going to say, you can go back and check the archives, but there's a kind of a little segment that I thought was really cool. It's a guy that's now a billionaire, but he was running a hedge fund at about $100 million back in '86. It's a PBS documentary. And it's kind of interesting to watch this guy get in and out of stocks yelling over phones like they did a long time ago. But it gives you a good indication of the exact same thing that happens now. But it was in the news segment that I had yesterday, so you can go back and check the archives for the link. But it's on Vimeo, and there's a big long number behind it. Maybe I'll get it at the break and show it again, because I think I still have it. But it's, you know, those things only last for so long, and then whoever is on that side pretty much gets over it. I don't know what is your question?
No, it's because my question is, looking at the 10-minute chart on the 10-day or 10-minute on 50 days, it just seems to work in the direction that I'm trying to get to be the best trader I can with long or short linear when it crosses under or over those 10-minute the setup on the Bollinger Band.
Those things work. I've just never, you know, a lot of times you can make some a little money off of them. I'm just not one of those guys that works extensively at shorter time frames. I mean, that's all I did 8 years ago. But at one point I figured out that large money was in not in the fluctuations but in the long-term moves, and I don't get them all right. But I do better over time. Basil would probably be a good one to run that theory through. Why don't you give him a ring tomorrow? I think he'd probably do fairly well for you. Anyway, thanks for the call, K. Rico. We will be back and start looking at some of these other stocks that have been moving in the marketplace.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Well, we certainly can't say that volume is picking up these days. It's about 100 million short of where it was at this time yesterday. 1.6 billion shares, maybe a little over that. With the S&P up about 2 points, you got to look at a market that's going sideways. And, of course, the longer it goes sideways, the more energy it's going to have when it moves out. I've had no positions since, last Thursday? Maybe even longer, last Wednesday. In the newsletter, I'd have to even go back and look at them to check out. Looks like a market that is waiting for something to happen. Jackson Hole, of course, this Friday. I don't know exactly what time that not Greenspan, but Bernanke, Gentle Ben, Uncle Ben's contaminated rice. I always like that, but I never ate it. Anyway, we've got that on Friday. Don't even know exactly what the time is going to be. I would suspect because it's in Jackson Hole, you're probably talking at least 11 or 12 in the afternoon. Hopefully maybe someone in the den has the times. We know that the speech by the Draghi from the ECB has been canceled for Saturday, which might have been a little bit of a market mover over the weekend. Of course, on Monday, we will be closed at TFNN. As the markets will be too. There is a fairly decent correlation between markets changing direction and character after a big 3-day summer weekend. And I think we might be able to continue seeing that again. And I don't really see this changing until Friday. I suspect we're going to get one more bounce up, and that's because I'm thinking that we're going to be down. Normally, the spike we're going to get after something's been flat this long, the first direction of movement is probably going to be a head fake. So you probably need to watch it a little bit. But if we had a nice, huge 20, 30-point bounce up on Tuesday and the volume continued to be light, then I think we could probably see the VIX take a major hit. Right now, what is the VIX? $16.23. Know that it's going to be a little accelerated because of the vacation day on Monday. When that takes out, it's probably going to take out about 75 cents out of the VIX, of course, because it figures 30 calendar days, not just trading days ahead. So the VIX is manipulated somewhat by our vacation day coming up, especially when there are multiple vacation days coming up across the next 30 days. You can see that actually move up significantly and change the value of the VIX. We were going to look at a few stocks. Amazon, did we do enough on that already? Just looking at it and continuing to see what we have up here. Let me get just a little longer time frame. So we've got a couple of major highs out here at $244 on September 19th of 2011. Got $2 higher than that with 5.9 million shares in, what was that, October 17th last fall. What we've gotten up the last few days is something you don't like to see in Amazon. That is 4 million shares, 1.8 million shares, 2.5, 2.4, 2.4, 3.6, probably the strongest day, 2.9, 2, and it's going to be very light in comparison with those previous highs from last fall. The question would be, how quickly are they going to be impacted by collecting state sales tax? Some of the bigger ones, both Texas and California, have already been set up. Florida, we can still buy without sales tax from Amazon and Newegg and some of those other ones. But eventually those companies were probably going to be beaten into submission, even though it's against the law, to collect sales tax. I don't know if Newegg is going to have to confirm because they're only in California and they're shipping out of state. But it is going to be exactly where this thing fails if we don't get any kind of more volume. But I'm suspecting you could have an announcement out of Amazon. They're quickly trying to move to cloud services, to shipping items to the new, maybe your local CVS or your local Walgreens store, and you could pick them up on the way home. But there is a nice gap out there. Did have some fairly decent volume, but even on just maybe a market pullback, if this does fail, we don't get any volume back up here, you could look at a fairly healthy move of maybe in $27, $28, $30 range back into the gap that started on $7.27. That would probably act as fairly decent support. So I'm not expecting the wheels to fall off the Amazon wagon. You've got two significant gap ups already that have been partially refilled, or actually the first one's been refilled, the second one is not. This could also be the part of the third gap, or a three-gap play, which you'd have one more gap up, and then this would come back and fill all of these three. With a flat market out there, not going to short this anytime in the next few minutes, but we come back and we see a very weak market. This is one of the bigger ones that looks fairly weak out there. When we look at some of the other stocks that came in, especially like Microsoft, really starts to be setting up a asymmetrical triangle in that, but not a lot to read off. The one that looked most interesting to me out here was Intel. This thing is making a very nice or looking like it's trying to set up a very nice base out here, right around this $24 level. We've been banging against that 1, 2, 3, 4, 5. This is the 6th time in just a few months that we've been back at these levels. Volume fairly light as we got back in and tested the low from a couple of trading days ago. But again, the lighter volume down here. Intel probably getting in the sweet spot, getting ready for what should be a nice fall season for Ultrabooks and some of the chips that they make much higher margins on. Also the release of Windows 8, which they should be able to piggyback somewhat on. Some of the weakness in Intel is just their ability to get a mobile chipset out that they can make any kind of the margins that they made on PCs. And a lot of people still fairly weak on it, but this thing looks like it's got a lot of risk reward in it. You're not going to move much farther down before you know that the stop would take that out, and you'd be right back down in the $21 range in Intel. So probably not a bad looking chart out there if the market does start to get moving. First IO is another one that looked fairly interesting to me. We've got a nice little high out here on April 26th at $29, 5.5 million shares. Another one kind of looking like the rest of the market, where it's gotten up to these highs, lighter volume, big gaps underneath that could be refilled. Fusion IO is FIO. And kind of watch this one very closely. I'd like to see that gap filled before the long-term progression into SSDs start to move. But kind of interesting. Another one that I've been watching here for a while and trying to see how the volumes come in is one that's been banging off a gap down and a gap at the bottom. Also, a nice trading range for this one if you like channels in some of your stocks. FIRE is the symbol. SourceFire is the company. But you had kind of a nice little pop down that set up a gap. That happened on the 3rd of June. We've been popping around, is that 3rd of June or July? June. 3rd of July, actually. Okay. So that popped down. You had some fairly decent volume that day, 2.3 million shares. We've come back into that the first time on July 31st on 1.3 million shares. Last few days, 500,000 shares, 300,000 shares, 250,000 shares so far today, but not a lot of strength back in this one. This, if you like playing channels out there, as our once humble host really liked, this one's kind of setting up on a nice move. And of course, $10 on a $50 stock, not a bad percentage move. Also, this thing continues to bounce around that $41 level, back up to the $51 or $52 level. But where the air is looking rather thin out there. TFNN host 3. Don't know what that is. Anyway, what else we got? Oh, we've got plenty of time left in this segment, over 5 minutes. Give me a call at 877-927-6648, 877-927-6648. We will discuss your stock. We're going to get to some other ones that are fairly interesting out here. We talked about Easy Chip, it coming back up, trying to fill its gap earlier in the show. Kohl's is another one. That we're looking at these, and of course they're either going to fail here or going to have a fairly decent breakout. Let me get just a little longer 1-year chart. This is another one where these stocks have come back on fairly huge volume down. This was on earnings, if I remember correctly. This thing gapped down on the 1st of December last year when they were basically came out early. Wasn't earnings, it was basically moving their guidance down on that day on the 1st of December of last year. That popped them down on over 13 million shares. That set up a gap that's been tried to be filled at least twice here. Now we're getting into the third time. But huge volume down, 4.1 million shares on February 21st as we got to $52.68. We continue to look at that. It's fairly decent resistance. They came in and hammered it hard on August 9th. at 7.6 million shares as it got a little bit farther into that gap. We are coming back up over these last couple of days, but certainly no strength. Even 3 trading days ago, 3.6 million shares, but we've got to 2.8 now, 1.8 today, so maybe 2.3 by the end of the day. A lot of these out there are looking at very heavy resistance levels, and if we probably don't get something out of Bernanke on Friday, I could see that Friday could be a day that they sell a lot into the longer weekend. But I guess it depends on when he comes out and what he says. So probably going to be we're probably going to be waiting for that action until then. Let me check and just see if anything else is going on in the markets as we get ready to look at a few other stocks out here. Zumiez, another retailer that has been a little bit weak, but maybe one of the stronger ones out here. ZUMZ actually coming into a little bit of support. May 21st, we hit a low of $31.65, 1.6 million shares. Got basically 60 cents shorter than that on August 28th, $31 even, and 1 million shares. So we continue to, that's so far today. Came down on a little bit bigger one, actually blew through a gap, but that was 1 million shares, 634,000 shares yesterday. Probably going to equal that today. So going to continue to watch this thing, see whether or not it will be able to close back above 31.65 to give you a decent signal saying that a possible bottom could come back in on that retailer. What else do we have out here? United Natural Foods, another one like Whole Foods out here. Been watching this one, trying to take out the top. Not a lot of volume in it, maybe a little bit better than some of the others, though. Today we're having a fairly light volume day. We're looking at the high on July 3rd, $55.86 with 450,000 shares as we got into that. Did a nice pullback, popped up. This one kind of worries me because of the lack of a sign of strength back off that $50.04 low on July 24th. But the volume up here maybe just a little bit better than we've thought. But certainly a lot of these hanging on the tenterhooks for economic news. If this thing cracked, it'd probably make its way back into that $52 range fairly strongly because of the lack of volume, and that makes it a logical point of pullback. Not bad if you have 50, maybe 56 and a half back down to the $52 mark. Not a bad looking trade, possibly in that. Regenon Pharmaceuticals, REGN, another one that is a big pharmaceutical company, but up on very light volume compared to its previous high, $145.04 on April 26th. And that came in at 3.2 million shares. REGN is the symbol on this. When we get in here the last few days, we are looking at about a fifth of that volume with 600,000 shares, maybe 500, about 600,000 probably by the end of the day, 500,000, 600,000. This thing has come in at about a fifth of the volume. It did have a little bit better pop out of, and minor sign of strength, back down to about 130. So this is another one that could probably take a fairly quick move back into the 120, maybe 125 area of this gap. So we've got about 30 seconds left here in this little segment. We will be back and cleaning up the show. We're going to look at a few more stocks. In the meantime, you've got plenty of time to pick up that phone. Give me a ring at 877-927-6648. That's 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we had a question in the den about Apple. And, basically I suspect that the little pop that they have or had here is probably going to dissipate as more and more people figure out that the lawsuit over patents is probably a long time to get solved and probably not going to get the action that a lot of people think it would or should. There are a lot of reversible errors that the judge made, especially the prior art part of it, and I think that'll probably come back in over the next few days or weeks. Of course, everybody's waiting for the announcement on September 12th. That will be the day that they announce the new products. We actually find what's in them. I don't suspect we're going to see a lot of movement out. It becomes harder and harder each time to make a product more revolutionary. Apple always kind of long on the bowl, short on the substance. They like to keep things, don't like to brag about speeds and things like that too much, or how much RAM something has. They want to kind of soft sell it to non-technical types. And unfortunately, when you get faster and faster, the harder that becomes to do, to make it look good and have nice, soft-spoken people like Peter Coyote doing the voiceovers on the ads. But they continue to sell stuff, not a problem. The question is how much of people are going to be willing to go to the 5, enough to begin with. Again, continuing issues on how much money that they can make on tablets when they're making half the margin they are on a phone. Especially now with more and more people opting out of phone contracts for their tablet devices, continues to make it look like it's going to be very tough as margins get squeezed by Google and Android phones. How they're going to make that up. It looks like it's going to be a while for Apple TV. Nothing new there. But I suspect we're probably going to get a bill of materials. Somewhere one of these phones is going to get leaked probably in the next, I would say, 2 or 3 days. Someone's going to get their hands on one of these phones. They're going to take it apart. We're going to see which chips are in it. We're going to probably see those companies actually move significantly. The one I'm watching in that field, so I think this thing's probably going to get back into 644 or below that between now and the 12th. And then we're going to see the PR machine take off. And then we're going to see on the volume whether or not this thing can go higher than 644 and stay with it. The lack of volume makes me think you're going to get one more peak underneath this thing, and then we're going to see it maybe go a little higher. 644 off $34 or something. Not all that big a deal. Does it have to come back in there? No. I would like it to, and have it actually break out this time on higher volume if you're long-term bullish on it. More likely, I suspect after the product announcements come out, this thing's going to need to do some consolidation before it takes the next big run, which will probably be, I would imagine, it may even take a while. It may take 6 months or a year. And then we're going to see the thing make a run for $1,000. But it's going to take a while. What was the one I was talking about here? The one that most interests me on for a play on. Let's see if I've got it here on my listing. Is in what is it? NXPI, I think. Is that? Yeah. This is the one that is more likely a play off of any cell phone business between now and that time. That's as soon as we see a leak of that new phone, is whether or not NXP Semiconductors has got a chip in it. If it is, it's probably going to be going to the moon. Right now, just a lot of market gas until we find out whether it is or isn't in it. NXPI is the symbol to be watching on that. It's going to probably move in a heartbeat when that news does come out. You all have a great and safe night. We'll see you tomorrow.